The month of March 2026 will go down in history as the darkest month for Indian equities. If you think the current 480-point drop in Nifty is just a minor correction, think again. We are witnessing a historic structural shift. While the gift Nifty is showing a green start for tomorrow morning, do not be fooled by the dead cat bounce. Today, we analyze the $12 billion FII exodus and the war-driven oil shock that is crushing the rupee. First, let's look at the wreckage. The Nifty 50 closed Monday at 22,331, losing over 2%. In just 1 month, the index has plummeted nearly 11%. But the real story is in the FII data. Foreign investors have pulled out a staggering 1.14 lakh crore rupees this month alone. This isn't just selling, it's a mass evacuation. For context, this is significantly worse than the 2020 COVID crash or the 2008 financial crisis. Global fund managers are fleeing emerging markets as the Iran-US conflict intensifies, moving capital into US dollars and gold. Why is India being hit so hard? It's the oil rupee pincer. With Brent crude trading near $115, India's inflation outlook has been set on fire. Brokerages like Goldman Sachs and Nomura have already started slashing India's GDP forecasts and Nifty targets. The rupee has crossed 95 against the dollar for the first time in history. When the currency drops 4% in a few weeks, foreign investors lose money just by holding Indian stocks, even if the stock price stays flat. This creates a feedback loop. More selling leads to a weaker rupee, which leads to even more selling. So, what should you do tomorrow, March 31st? The gift Nifty is signaling a gap up opening of over 200 points. On paper, it looks like a recovery. But quantitatively, this is a sell on rise market. The India VIX is at 26.8, meaning the swings will be violent. Our stance remains strongly bearish. Expect the market to open near 22,550, but watch the 22,650 level closely. If the index fails to sustain there, we could see a fresh wave of selling that takes us toward 22,000. Avoid aggressive buying. Until the Iran conflict shows signs of de-escalation and crude drops below $100, the bottom is not in. Stay disciplined, keep your stop losses tight, and remember, in this market, protecting capital is more important than chasing profits. Subscribe for your daily market roadmap.